Jeez. But you know what else you could vlog? You were telling us right before we went into this about a $12 million YOLO bet. What's this about?
Yeah, so basically what I did is I paid off all my margin, which was something that was kind of just like, I don't know, I'd look at it, I'm like, why do I have $6 million in margin? Like, if the market went to the toilet, I can't come up with $6 million at the snap of a finger and pay that off. So I'm like, this is not so good. And I really believe that any kind of short-term thing would just be short-term. But when you've got margin, man, these banks, they got you, they got you in such a position where they can really, sell everything you got to pay off that debt and sell you at bottom. We saw that with GameStop too. When GameStop the first time around started crashing, Robinhood just starts liquidating people.
Yeah.
So at bottom prices too. So I decided to sell. It was $9.5 million of stocks is what I sold. And I bought back $3.9 million in options, various different expirations. And somebody did this calculation for me. I did a rough calculation. They did the exact calculation for me. And the exact number is, if I were to want to have the same upside with shares as I have with that 3.9 in options, I would have to have $12,176,000 in shares. So I'm basically controlling that much potential market value with just 3.7 million. And since I sold like 9, I got rid of my 6 million in margin, and I'm actually controlling more exposure to the market.
Now, isn't there a chance those options expire worthless? There's a chance. So there's a chance. So your downside is going to be $3-something million. If you lose this.
Right. So the way I was looking at this was that if there's like a margin call, if the market goes to crap, I mean, the odds are the market wouldn't go to crap. I think it'd be pretty low to get margin called. I've never been margin called. It'd have to be some crazy crisis. But the worst case scenario on having the margin is they liquidate your shares at such a low level that the market's crashed to such a level where they sell you out at bottom, they eliminate your margin, they take away your credit line, so you can't even buy again at bottom if you wanted to because you'd had nothing. You'd probably be throwing in cash to try to prevent the margin call, so you wouldn't have any cash. And you'd kind of lose half your portfolio quickly through a really bad, what could just be a flash crash. Who knows? Maybe some crazy thing happens in June, and the S&P 500 and the Dow's down 40%. Who knows, right? Whatever. A new COVID strain or whatever. And so I thought that, okay, there's a big risk that, gosh, what if potentially 6 to 7 to $10 million of your portfolio just get eradicated. And I thought, okay, well here, now I'm only taking a 3.8-ish million dollar risk. And I don't believe that's going to go to zero. It could go to zero if I held them all, but I can always trade for longer term options out in the future. So even if there were, setbacks in the market, I could always grab like a 2024 option next year. So since some of these are 2023s, I'm optimistic that I'm going to be okay. But the whole rationale behind it is, I think things are going to be great. I really think things are going to get better. So I've actually taken this, I'm calling it a YOLO because I'm taking much more risk because the options fluctuate way more. It could be a really stupid mistake if the markets trade sideways or downwards for the next 2 years, but I don't see it. I think we're going up, and I'm pretty confident of that.
Why not just go and buy the shares? You'd be sitting pretty comfy, just like $4 million invested, and then you would never have to worry about it.
Yeah, I don't know. I
what don't you know about?
Well, I could have done that, and I think that's where it becomes a little YOLO-y because I could have easily done that, right? We could have sold. I just wouldn't have had to sell as much. I could have. What I did is I closed out my M1 Finance, and so I closed out my M1 Finance to concentrate into my higher conviction holdings. So I had all these funds available, and I thought, okay, what do I want to do with this? I've got, $3.9 million here. Do I go shopping for options? Do I go shopping for shares? The beautiful thing about shares is you never have to pay taxes if you don't want to. You can just hold them forever, right? Mm-hmm. And this was right before the whole Joe Biden capital gains thing.
Yeah, we'll talk about that in a second, yeah.
Oh yeah, we got to talk about that. But yeah, I mean, at the time, I was thinking, oh, no problem. We'll be able to, we'll hold these options for long-term capital gains. I'll have no margin, and I think the way I convinced myself to try to eliminate the margin is that, okay, well, if I do options, I could have no margin, but potentially have a really big upside to where I end up way better off than where I was before. Like that $12 million, imagine that or these options, the option values, if we get a big rally this summer or this fall, that could triple or quadruple in value. And so I look at that, I go, sweet. I believe there's a chance that some of these things are going to do that. Maybe not all of the ones that I chose, but I believe there's a chance that maybe Tesla will. Maybe, all Tesla has to do is double, and the options will about quadruple in value, triple to quadruple in value. So I figure, you know what? Let's do a little bit of a YOLO. It's 27% of my portfolio. I really believe the market's going to rally either this fall, winter, or beginning of next year. Let me put my money where my mouth is, and if it works out, I'll be able to look back and go, dang, I got rid of margin, didn't miss a beat in the market, and made more money. It's just a bet. Why do people go to Vegas?
I think it's super smart, but only really, obviously, I'm sure you have, but assessed your risk tolerance, which I'm sure you have. You said it was 27% of your portfolio. I think it's super smart. I've actually recently been buying some Leap calls, which I've never really done before, but just, I want to say in the past like month or two, I bought like a couple long calls on Palantir because they were so dirt cheap, like far in the money too. And so far I'm up. So yeah.
What makes